Hi, my name is Christina Robinson and welcome to another edition of CMS Forex News. Today is Monday, November 12, 2007. The theme of risk aversion extended from Friday's session. Investors are pulling their money out of high yielders such as the pound and the commodity block of currencies, which was funded by borrowing the yen. This flight from carry trade is causing increased volatility in the Forex markets. When the markets opened on Sunday, the pound-yen pair continued its tumble, declining about 500 pips before hitting support at 225. In the last two sessions, the pair fell almost 1,100 pips. The euro also plummeted against the yen as the euro-yen pair fell about 300 pips on the day. In the last four sessions, the Aussie-yen pair has fallen from around 106 yen per Australian dollar to 97 yen per Aussie, a decline of more than 900 pips. The pair is now touching levels not seen since mid-September. The last month and a half of gains have been wiped out. It was a similar story for the New Zealand dollar against the yen. In a final example of carry trade unwinding, take a look at the Canadian dollar-yen pair. Since last Wednesday's high near 125, the pair has slid more than 1,000 pips and is now trading near 114. It is quite apparent that the yen is flexing its muscles during this time of investor skittishness. The dollar hit a 1.5-year low against the yen, but overall benefiting from Friday's and today's market reactions. Here against the pound, we see a large 500 pip slide that started on Friday. The dollar also gained against the euro. The unwinding of carry trade is helping the U.S. dollar versus its northern neighbor as well. Since Wednesday, the U.S. dollar is up close to 500 pips on the loonie, bringing the pair above 0.96. Last week was the first time in 9 weeks that the U.S. dollar had a weekly gain on the Canadian dollar. Let's take a look at some of the releases that came out overnight. In Japan, prices to producers increased more than expected in October from a year earlier, as global commodity prices rose and oil hit a new record high. The Japanese current account surplus widened to 2.89 trillion yen, a large jump from the August figure. Consumers' confidence over the next 6 months soared in an October survey as the index hit a 3-year low. In the UK, prices producers paid to make their output increase 0.6% on the last month and 3.8% on the year, the largest since December 1995. Higher prices for oil and food pushed the index up. The price of inputs for the month was 1.8% and 8.6% on the year. Again, just as in Japan, record high oil prices are contributing to this increase. Turning to some upcoming releases, later tonight we get GDP data from Japan, housing prices from the UK, and business confidence out of Australia. Overnight, the Bank of Japan is expected to hold rates at 5% when they announce their interest rate decision. The UK will reveal its consumer and retail price indexes. The Eurozone will post industrial production numbers as well as economic sentiment. The docket is light for North America as U.S. pending home sales is the only major release. And that's it for today's news. I'm Christina Robinson, and we'll see you here again tomorrow at cmsfx.com.